Coming up next here on Channel 17, The Barefoot Contessa. And on Channel 23, Mystery. TV worth watching. The music, the stars, the big events. It's all right here on Festival 88, coming in March on Channel 17. Anne of Green Gables is back in the original award-winning show and in a new enchanting sequel. Then play with the babies in the Best of Wild America. And watch the miraculous rescue of the whales on Nova. There's off-the-wall comedy with Faulty Towers, a sentimental swing with Tommy Dorsey, and the compelling stories of the EastEnders. The music, the stars, the big events. It's all right here on Festival 88 on Channel 17. Coming up next here on Channel 17, the Nightly Business Report. TV worth watching.
Local broadcast of the Nightly Business Report is made possible in part by member support and by a grant from Computer Task Group, a national developer and distributor of software services.
Coming up next here on...
proud to support the quality programming on Channel 17.
This is the Nightly Business Report, made possible by Digital Equipment Corporation, with its new generation of VAX family computers, connecting headquarters, branch offices, production and research centers into a single integrated computing environment. Digital has it now. By Kidder Peabody, for over 120 years, one of the world's leading investment firms, serving the financial needs of individuals, corporations, and governments. Kidder Peabody, professionalism worldwide. And public television stations across the nation.
Good evening, everyone. President Reagan today delivered his final federal budget proposal to Capitol Hill. And as Washington correspondent Bob Friedman reports, while previous Reagan budgets haven't fared well with Congress, this one is seen as having a better chance because of deals made in December's budget summit.
President Reagan told congressional leaders today that he kept his part of last year's budget bargain.
This budget fits within the second year of the bipartisan budget agreement that we reached last November. It also meets the deficit reduction targets of Graham, Rudman, Hollings.
The president's budget was distributed this morning, and as expected, it offered few surprises. The budget proposes a record level of spending at over $1 trillion. The projected deficit of $129.5 billion does meet the Graham-Rudman Hollings target. Under the president's budget, 27% would be spent on defense, 14% on interest on the national debt, 43% for entitlements, 11% for grants to state and local governments, and 5% for other federal programs. At a briefing on the budget today, administration officials said the budget is based on expectations for a healthy economy.
With the lower dollar, real exports should contribute substantially, both to economic growth and to further reductions in the trade deficit. The inflation rate and interest rates should continue to decline.
The new budget calls for a 2.6% increase in defense spending, with a big hike for Star Wars development. But the Pentagon would have to reduce some forces and delay or eliminate several weapons programs, as funding would be less than forecast last year. The president also called for a 4% hike in education funding, $11.5 billion for space programs, including a manned space station, a 38% increase in AIDS research money, and more funding for air traffic controllers. But mass transit and other domestic programs are cut in the president's budget, and that, say Democrats, will be the battleground.
The president's budget would spend more for homes in space than for the homeless here on Earth.
As this budget debate begins, President Reagan is urging Congress to use restraint and self-discipline in planning spending for 1989. Reagan warned Congress today that excessive spending could lead to increases in interest rates, inflation, and the jobless rate. In Washington, Bob Friedman for the Nightly Business Report.
Also at today's budget briefing, Treasury Secretary James Baker gave a qualified endorsement of the Federal Reserve and its policies.
We feel that the current course of monetary policy being pursued by the Federal Reserve is adequate.
Baker also described the dollar as being more reasonably valued And as a result of the lower dollar, Baker said strength in the U.S. manufacturing sector should lead to another year of steady economic growth.
In the latest on the state of the economy, the nation's factories, mines, and utilities continue to run at 82.2% of their capacity last month. That's unchanged from December's revised rate and maintains the highest level of industrial usage in almost 8 years. The numbers show that while the mining and oil industry cut back on operations, utilities boosted theirs while factories held close to their December operating rates. Well, prices on Wall Street didn't hold up very well today as the Dow fell more than 14.5 points. With the details, here's Paul.
The market moved lower as trading got underway this morning, and some of that weakness was due to yesterday's disappointing technical action when a closing loss of almost 5 points in the Dow Industrial Average ended a very promising 5-day 110-point rally, which pushed the index above the 2,000 mark for the first time since January 7th. But it became quite apparent that a lot of stock was available for sale at this level. Indeed, sellers took the upper hand early on today, sending the Dow to just over a 6-point loss by 11 a.m., while declining stocks established a 6-5 lead over gainers. Because volume was extremely light during the early sell-off, some traders figured the market might be poised for another attempt to push impressively above the 2,000 level. So they did enough buying to cut the Dow's loss to a bit less than 3 points by 1 p.m., but the bulls were anything but aggressive. This continuing lack of conviction kept the market trading in a narrow range in mid-afternoon on relatively light volume. It appears that the key for any major move up or down depends on some change in the Federal Reserve policy at this stage. Discouraged by the market's drop below 2,000, traders turned heavily to the sell side in the final hour, with futures-related selling aggravating the decline, and the Dow Industrial Average proceeded to fall to a closing loss of 14.58 at 1986.41. Theoretical high of the day, almost at the 2012 level, and the low down around 1973. Trading volume today down about 25 million shares from yesterday's pace, and down volume exceeded up volume by about 18 million shares. The Dow Transport Index moving up 0.59, utilities off 0.65. Dow 65 lost nearly 3.5 points, but the closing tick up plus 111, indicating the market was trying to struggle back up. Standard & Poor's 500 was off a little over 1.25 points, a little over 1.5 points loss in the 400, the 100 off nearly 2 points, and the Commodity Research Bureau March Index down 2.5 points. New York Stock Exchange Index lost just over a half point, but better than a 3rd-point gain in the NASDAQ Index. Value line down about 1/4 point. The Wilshire 5000 was down 10.306. After the stock market closed, the Federal Reserve reported in the week ending February 8th, the M1 money supply fell $3.4 billion. Well, the bond market received some buying support from the news that factory capacity utilization remained unchanged in January after a long series of monthly increases. And that's a figure which suggested the economy may indeed be slowing down and which might prompt the Federal Reserve to move to an easier monetary policy. Whatever the case, corporate and tax-free bonds were narrowly mixed with 8-point gains and losses, but governments moved higher by mid-sized fractions for the most part, including the long-end treasuries of 2017 up 10/32. Shearson Lehman Long Treasury Bond Index up just over 2 3/4 points, and Fed funds were steady all day around 6 5/8%. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets today, gold led platinum and silver prices lower. On the New York currency markets, the dollar gained against most major currencies in apparent response to Treasury Secretary James Baker's comment on the greenback's value. And oil prices moved lower in both New York and London.